Good afternoon, YouTube. It is me, Jonathan, or good morning, or good evening, whatever time you're watching this video. Welcome back to another video. It's been a long time since I've made a video. I think the last time I made a video was back in August of 28th of 22, which it's been a while. Of course, back then, let's see if I can pull up my portfolio. Right over here, it shows my portfolio. I was at 17,000 back then. Of course, now I'm up to 24,000. That's almost like that's like a 7K gain right there. Of course, the portfolio is up almost $4,000 since the last time I made a video, as in like investment change. My contributions have only been like about 3,000. Of course, my performance though. I'm closer to 26,000, so that's not near as much as like other stuff. So, yeah. But right now, I've been buying a lot of Chinese stocks, even though they're going through their issues with Evergrande and their real estate issues that they're having. They're having a lot of debt issues. I have positions in Alibaba, Tencent, and Tektronic Industrial Company Limited. The only stock that I'm up in those China stocks would be Tektronic Industrial Company Limited. I'm up almost like 35% on this stock, so it's not too shabby. Of course, if we're talking like China, we're also talking Taiwan, which I'm up almost like 65% on TSM. I really liked TSM when I was buying it back in November and October of this past year. Now it's sitting at like 140 a share, and I'm like, I liked it at a 2.68% dividend yield, but now it's sitting at like a what was that, 1.15, 1.59? Yeah, that's terrible. But of course, not everything's dividends. My yield on cost right now is 3.5%, which is much higher than it was back in 2.7. So, and of course my portfolio yield is 3%, so that's not too bad either. Annual income $750. I'm gonna make in the next trailing 12 months, which is fantastic. So yeah, we'll go more into this whatnot. Of course, everybody's been telling you to buy AI. I haven't been buying that many AI stocks. I've been buying some technology stocks, but nothing crazy. I've been focusing on a couple smaller caps. Of course, I'm not going to disclose anything I'm buying right this second. Even TSM, I'm not buying right now. Even other stocks. Of course, last time I was buying, I think Meta, and I was buying. I'm trying to think, what was the other stock? Meta and 3M, which they're still not too bad right now. Well, Meta's up too much. That ain't gonna happen. But 3M doesn't seem like a bad buy right now. But of course, my biggest positions are the S&P, Google, Meta, Tencent, CVS, BTI, and Alibaba is following it the last. And right now, my phone, I have a Pixel, and my phone slightly just listened to me, but that's okay. Snap. Gotta love it. But yeah, that's what the portfolio looks like right now. I'm not telling you what I'm buying specifically. I do dollar cost average into the S&P, but outside of that, not even that. Like, the thing is, right now, everybody's telling you to do that type of stuff, but like, we don't know if it's gonna be continuing to do that well over the next couple of years, because market's a little bit speculative right now. Definitely certain stocks are a little bit interesting. Specifically in the AI sector. Nvidia, Microsoft, those are kind of interesting. Well, just a see bit. Of course, this month I'm about going to make $85 in dividends, which is going to be my highest month yet. It's actually closer to $100 in dividends, I'm pretty sure. Let me just double check here on my phone. I also, whatnot. Just double checking real quick. But $85, I made $58. I'm going to make $58 upcoming month, I also have a CD that's going to be due, so it's going to be closer to $100, and cash flow is going to be coming to me. Then $51, and then $77. And then, of course, I have another CD that will be coming due in July. But it says this month, 49 plus 35 is... Oh, I guess it is $85. I just don't know how to fucking add. Snap. And then, of course, the following month, I'll be making... So this month, right here, actually, in April, I'll be making $97 because of my my CD will be coming due. And then July, I'll be actually making $106 because of another dividend that's going to be coming through, so, or dividend CD. So I like doing the 9-month CDs, and I'll try to space them out so I can get nice steady cash flow in case if there is ever a market in which there is a big buying opportunity, we'll be taking full advantage of it. So yeah, that's about it. Of course, right now I'm making about $50 on average every single month. Of course, certain stocks yield a lot higher than others. Other stocks don't yield anything except once a year. Other stocks will yield quarterly. Other stocks will yield semi-annually. And other stocks, like Google, won't yield anything. So, of course, I look at a stock like Google right now as more of a growth opportunity more than anything. So, I know a lot of people are saying, is AI gone from Google? I don't know about that one, because look at the platform that you're watching this on. So keep that in mind. But hopefully you guys enjoyed this video going over my portfolio. The only two out of the Magnificent Seven I have right now is Meta and Google, which is kind of funny. But I would like to buy Apple. It just needs to fall another maybe 10% or so. That wouldn't be a bad one. Of course, it is a slow-growing company, in my opinion, but it doesn't seem too bad. But man, everything's so expensive right now. Google's still growing. It's still in an industry. So, of course, maybe I might go over to certain stocks that might be interesting buys in the next video. Of course, there are a couple in the what a lot of dividend investors go after that are actually decent buys right now. Of course, before this video, even before this past year, I actually didn't own one of these stocks, and of course, I recently acquired Starbucks, which that doesn't seem too bad of a buy right now. But of course, everybody's time frame is a lot different. And of course, nothing that is said in this should be taken straight as financial advice. So make sure you do your own research. My risk tolerance is a lot higher than most. So yeah, pretty much. Oh, I forgot to go over in this little area over here. So of course, over the past year, I'm up 23% annually, which is pretty decent. If we go, say, over the past 3 months, though, I'm up 7.5 or 7. So I'm matching what the market's doing. Over any specific period of time, the market's gonna fluctuate from here to there. So you shouldn't be looking over just 3 months. You should try to be looking over 10 years. Even if I pick a specific period of time, I'm doing actually even stronger than the market. So. Right now I'm over over this period of time I'm at 38.5% versus the market's only 38.3%. It's only a couple percentage points different. Of course, that had to take a big yield of the stocks like Nvidia and whatnot to go crazy like that. So I guess I do own Nvidia and Microsoft and those other companies through the S&P, but right now it's kind of interesting. So of course, my net contributions during this period was about $5,000. Investment change, though, is actually $6,000. Of course, this goes from all the way at $15K all the way up to 26K. So that's kind of interesting. It's always fun like that. Let's go over to risk and return, of course. Right now, I'm about matching over the past 3 months. So it's like matching, and I'm less risky. Over the past year, I'm still a little bit less risky. I'm not as closely matching, but hey, right now there's a big tech bubble. So I wouldn't say tech bubble, excuse me. It could continue. We don't know. So yeah, that's basically it. Of course, if we go to November, it's going to say I'm actually, of course it's going to be like that. Forgot to pick the right year. Now it's saying I'm way more risky, but that's because of like companies like Meta, which of course I've been selling out of just because it's so expensive. Or I don't know if it's expensive or not. I still have shares of it. But yeah, that big old Magnificent Seven that's been going like crazy. So I've been enjoying the market, other than I would really hope at some point that there will be a buying opportunity. Of course, I've still been dollar cost averaging through just regular contributions with just normal, as well as my dividends, reinvesting them. So right now I'm just trying to build that big old snowball. Yeah, hopefully you guys enjoyed this video though. Catch you out for another video. Also, if you guys are curious about the software that this is Track Your Dividends. So if you're curious, I'll link it in the description. But if you guys do enjoy this video, just give it a like, subscribe. I'll be making more videos. So thank you.